In this panel, we have experts who will talk to us about how business can accelerate climate action. And with us, we have Kate Wilson, who's the Director of Environmental Sustainability at Vail Resorts, Filip Engel, who's the Vice President of Sustainability at Ørsted, and Daniel Shurey, who's the Vice President of Sustainable Finance with the ING Group. I'm going to ask each of the panelists an opening question first, as a way for them to introduce their own company and their own work, but to also answer this key question, which is how are they in their businesses accelerating climate action? And maybe first we can start with Filip, because at Ørsted, the process has been probably faster than in many other companies. Filip.
Yes, it certainly has been fast, also faster than we thought it would have been. At Ørsted, we have transformed in a decade or so from being totally based on fossil fuels, coal, oil, and gas, to today being totally dedicated to green energy. We've done that by closing down our coal plants. We have divested oil and gas, and we have built up an offshore wind business and have actually become the world leader in offshore wind. At the same time, we are focusing a lot on onshore wind and also solar energy and storage. And what we've done over the years, I think our biggest contribution in accelerating climate action is probably to take a lead on developing offshore wind as an industry. And that has been very much by setting ambitious targets. Let me share a story with you. I remember more than 10 years back, I was in Brussels at a conference. I just graduated from college, and I remember there was a conference on how to go green in the European energy system. And at that point, offshore wind was really a niche. No one thought it would be really anything. And I remember people talking about how these turbines, who were sort of quite small back then, how could they possibly be scaled? And there was no one who really thought that could happen. One of the reasons why that you didn't have ships big enough to take the turbines and install them offshore. That was true back then. So that was seen as an insurmountable challenge to scaling the industry. Now, where are we today? We have turbines that are 6, 7, 8 times as big as back then. What have we done? We have built bigger and better turbines, obviously, in the industry, and we've also built bigger ships so we can install those turbines. It's just a small anecdote, and it seems today obvious that what we would do was just to build bigger ships to challenge to overcome that problem that I just mentioned. But back then, sort of no one could really see how could you do that. And I think that's really illustrative of the challenges here that we have with scaling. It's about creating scale through technological innovation above all. And we have this tendency to think that technological development happens incrementally, and very linear, but it happens a lot through leaps, and it really does so. It really helps a lot if you set those targets, and I think that's a really important point for when you talk about scaling. It's we scaled offshore wind much faster than we thought. We also thought it would take a long time to bring down the cost of offshore wind, but by scaling the technology, we had a lot of technological learning, and through that, we managed to bring down cost of electricity of offshore wind to make it cheaper in much faster than anyone thought. So just between 2012 and 17, the price of offshore wind fell with almost 70%. And today, it's cheaper to build offshore wind than coal and gas-fired power plant. The same goes for onshore wind and solar, by the way. And I think that's really a key point to remember here, that we do not have a technological problem. We have a scaling problem. We have the technologies we need to go from fossil fuels to green energy. Sure, you need to develop and further refine some technologies, that's for sure, but we really have the brunt of it. Now it's about scaling.
Right. And Kate, in your work, you should tell us about how you're doing acceleration on climate action, but also you've had the pleasure of working with Ørsted in some of those activities.
Yeah, we have. So at Vail Resorts, we are a leading global mountain resort operator. We have 37 resorts in 15 states and 3 countries. And we've been on a sustainability journey for a long time. Officially, we started working on sustainability in 2006. And in 2017, we announced our commitment to zero. So that's our commitment to a zero net operating footprint by 2030 across all 37 of our resorts. And so within that, we have a commitment for zero net emissions, zero waste to landfill, and zero net operating impact to forests and habitat. And so, yes, we have made significant progress since announcing that goal in 2017. We were able to collaborate with Ørsted, and just this June, 82 turbine wind farm came online. The Plum Creek Wind Project, we're really, really proud to have helped enable that project to come to life. And once it's operational for a year, next summer, it will address more than 90% of our North American Scope 2 emissions. So we're really excited about that. And that puts us, a really, really significant way down the path for our RE100 goal, or to have zero electricity emissions. We've also, made great progress in terms of our own operations. So commitment to zero, we feel we have a real opportunity to address, emissions and climate within our own operations. So then that's where the zero waste to landfill piece comes. We had a goal to be 50% of the way there in terms of by the end of 2020. We're releasing a report later this fall that will provide an update on where we are in that goal. And last year we were at 44%. So we've made massive progress. You talk about accelerating change, and I think I'd like to highlight two partners we work with there as well. So we feel like it's great for us all to have really bold sustainability goals, and we absolutely need to do that to protect these places where we live, work, and play. And at the same time, we need to partner with our communities and have strategic partnerships able to move everyone forward. So this year we have partnered with PepsiCo on a really exciting initiative to recycle chip wrappers and snack wrappers, and to be able to turn those through TerraCycle, to Adirondack chairs and patio furniture that you'll see in our Colorado resorts this winter, which is really exciting, as well as a terrain park feature in Breckenridge. And then also, working with Helly Hansen, they have been doing amazing stuff with sustainability and innovation around fabric. So we feel like, working together and partnering and pushing each other is really important part of that acceleration for us.
Right. And Dan, none of these things are going to happen without being able to access capital. What at ING have you been able to achieve that has helped accelerate climate action?
Hi, that's a great question, and I think Philip really hit the nail on the head when he talked about the need for scale. We look at the IEA's models around what is going to be required for a Paris-aligned future. They're estimating around 30 trillion euros of additional investment between now and 2035. So as you said, there's going to be a lot of need for capital, and that's something that ING has been thinking about for a number of years now. So really, it's a multi-stage approach. There's multiple things that need to happen from a financing perspective to get to where we need to be. I think number one is that the financing institutions need to look at themselves to make sure that their own footprint is in line with the Paris-based future. And we look at ING, we've been climate neutral since 2007. So it's very good to talk the talk, but we have to walk the walk ourselves. A second phase is thinking about what we don't finance. So putting a kind of an exclusion criteria on certain sectors, certain activities that will never get us to where we need to go is also very important. And ING, again, was the first bank to announce an exit from coal financing, and we're very strict around who we work with from the utilities to make sure that their future is indeed Paris aligned, as well as not including any new additional coal. And then the third stage really is around what we do finance, and that's where we see ING can make the most impact. It's not so much looking about the kind of the carbon past of investments and companies. It's more thinking about what we can do to finance the technology and innovation to get them to where they need to go, and that's very complicated. You need to look at every single sector. You need to work out exactly what each sector needs to do to be able to align to a Paris-based future. And then you need to look at the gap, the technology gap and the financing gap, to where companies are today versus where they need to go. That's where we get really creative, and we can really help to understand where the gaps are and what the need is. We use things like thematic financing, so we look at green bonds, sustainability bonds, and more recently sustainability-linked loans and bonds as well, as ways to incentivize corporates to really get on track to Paris.
Right. And sticking with the point about sustainability-linked bonds, these allow you to be able to move the company overall on their targets that you set with them? What are the criteria, in numbers that you're setting to be able to lend this money to them, and how do you ensure that those criteria are actually accelerating climate action?
That's a fantastic question, and we saw the introduction of the sustainability-linked bond principles just this summer, actually, which is setting a good precedent to the kind of requirements for this brand new type of sustainable financing instruments, and it comes down to really two things. It comes down to selecting the appropriate KPIs. So when we talk about a sustainability bond, let me take a step back and explain what it essentially is. It's a general corporate purpose financing mechanism. So you don't need to finance specific projects, green projects, as you would with a green bond. However, the characteristics of the instrument are tied to certain KPIs being met. In other words, for example, if an issuer has a KPI around greenhouse gas emissions in the future, if they do meet that target, then typically the characteristic might stay the same, or we might see an improvement in their favor. If they don't meet that target, then the financial characteristic might work against them. It could be, for example, a coupon step up. So it becomes more expensive from a financing perspective. So the two key elements here are selecting the appropriate KPIs, and they need to be material to the business. So it needs to be something that's particularly important and particularly material to the sector that they're in, and speaks to the change that needs to happen within that sector. So for a carbon-intensive sector, it needs to be around carbon. For a waste-intensive sector, it needs to be around waste. So the selection of the material KPI is important, and then the calibration of that KPI as well. So making sure that the target that has been set is calibrated with a science-based approach. That's really important to ING, and in fact, we were the first bank to look at science-based approaching to our financing or to our lending portfolio. It needs to basically move that company within that sector in line with what is required and what has been scientifically proven to be needed in order to meet certain targets, like 2 degrees Celsius warming, for example.
Right. And I'm going to take an audience question here, which is for Kate, but I want to just give a bit of background, which is in defining emissions from companies, there are three types. There's scope 1 and 2, which Kate mentioned, which is direct emissions that are generated either from the operations or from the electricity producers that provide the power to operations. But there's also scope 3 emissions, which are emissions either created by customers or through the supply chain. And the question is, does Vail include in its commitment the emissions associated with guests traveling to the resorts and the housing associated with the guests staying there?
Sure, I'm happy to address this question. So Commitment to Zero specifically, it addresses scope 1 and 2 emissions. So we felt like in launching our goal, we had the biggest impact in our own operations to start with. However, we do also operate transportation, the Epic Mountain Express, and so that is included. We also do have our own housing and hospitality and hotels and retail stores, and that is all included as well. And then I would say, within our scope 1 and 2, right, that gives us the focus, at least in the first couple of years, to be able to do things like, put in 400 low energy snow guns, to switch out 11,000 LED or lamps to LEDs. Really focus on, we have committed $25 million between 2017 and 2030 to address energy efficiency and energy reduction of our scope 1 and 2. So that's really important to us as a starting place. That does not mean that scope 3 will never be formally a part of Commitment to Zero. And again, we do own a lot of the lodging where our guest stays, and that if we are able to control it, then it is that is within our boundary.
In terms of sticking with sort of the ability for companies to be able to accelerate, one thing that we've heard, and we heard in the previous panel as well, was policy matters a lot. And maybe Philip, you can talk about the process through which Ørsted, apart from setting ambitious goals, also was able to tap into this support that governments gave in this crucial period for offshore wind. And now we're seeing results, right? This week, we had Boris Johnson, the Prime Minister of the UK, announce a really ambitious goal to put out 40 gigawatts worth of offshore wind turbines, which is almost 3 times as much as has been installed in all these years.
Yes, that's a great question, and I think obviously societies, governments, and societies have played a huge role in making the cost of green energy come down and making it cheaper than fossil fuels. It would not have happened without the investments made from society in subsidizing the sort of first years, if you will, of the life of green energy, and that is instrumental. And what we see today then is that we also need to start shift the focus, because now it's less about sort of subsidizing the development. Again, it was a question of scale. If you want to bring down the price of something, you need scale. How do you get scale? Well, I mean, investors, developers, they look at it, and they can make the business case. So that's why you have needed governments to step in and support in that phase. And now we're at a place where, as I said, it's cheaper. But now we also need to make that switch, because now it's much more about looking at the policy around development of different types of green energy, and also on the demand side. So when we talk about we all need to take action and act now, that's really important. But it's sort of, you could almost rephrase it a bit and say, what's really important is also how do we act, and how do we act on policy. So let me give you one concrete example. Today, when you want to build offshore wind in the North Sea, you have different uses of the sea, of the space, obviously, military being one, fishing industry, transportation. What comes last in the order of sort of priority here, when the member states of the EU do their spatial planning, that's green energy, that's offshore wind. So you want to sort of look at your policy setup and find a way to integrate offshore wind in the same way as you do with other industries. That's just one example. So it's sort of this much more sort of nitty-gritty policy that we need to turn to really get the green transformation going, because it is a bit of a paradox that on one hand we have more and more companies committing to more and more countries committing to very ambitious climate action. And you just mentioned Boris Johnson and the UK's very ambitious announcement here. And on the other hand, you have a lot of finance available, really. And thirdly, you have green energy technologies that are actually cheaper than fossil fuels. So why isn't this happen automatically? Well, for many reasons, but one of them is that there are a lot of local issues around development of green energy projects, and also integrated into the grid, that are hindering that development. So that's where we should also really start to turn our focus to.
Right. I'm also going to take another audience question. We have a question from Preeti in the Netherlands, and it's a question for Dan. And she asks, what is the role and importance of sustainable development goals in sustainable financing? You talked about science-based goals, which are largely looking at the Paris Climate Agreement as the basis to be able to set a trajectory for where emissions need to go. But the UN also has sustainable development goals, which are key if we need developing economies to become as developed as developed economies are.
I would say two things. Firstly, sustainable finance is not just about climate action, and there's of course a priority in terms of climate change and climate mitigation. But sustainable finance also covers social aspects as well, and we've really seen the growth of that social aspect of sustainable finance in the past year or so, particularly with the crisis starting at the beginning of the year. So the SDGs can be very useful from that perspective, because they cover all matter of issues, from economic growth through to education and healthcare as well. And these are all equally important elements of sustainable finance. So the SDGs help to underpin all matters of environmental and social positive impact. And the second thing I would say is that the SDGs help to provide a very good context to the sustainable finance instruments themselves. So rather than just a company issuing a green bond, say for example, as a standalone instrument that really doesn't bear too much resemblance to the company's corporate strategy, to its long-term commitments, its long-term sustainability objectives, the SDGs help to map that sustainable finance instrument to the aspirations of the company, essentially who they are as a business, and what their underlying goals are from a sustainability objective. So the SDGs help to provide real context to the rationale behind sustainable finance and the long-term objectives there as well.
Right. So we're coming towards the last 5 minutes, and I thought a really nice way to end this would be to perhaps give maybe one or two things maximum that you really would like to see happen in the next 5 years in this space to be able to meet some of your own goals, but also maybe take them a step forward. And maybe we can start with Kate. So do you want to?
That's a great question. Yeah. So, the way that we think about, climate. Yeah, sure. So the way that we think about climate action at Vail is really, we have to set these really bold goals. And you might not have all of the answers for exactly how you're going to reach those when you set them. So rather than having companies think about, oh, what's the next thing we can do? What do we think we can achieve? It needs to be flipped on its head. It needs to be, what will it take to solve climate change, and setting bold goals to that level, and then partnering with your communities, with other companies, with governments, with cities, so that we all move forward together. And I think, so for me, I think it's really about taking bold action and not being afraid of that, and looking at what will it take to mitigate climate change, rather than incremental steps that folks think they can do. It's time to think big and bold and take that action and work together to figure out how we'll get there.
Right. And Philip, you were hinting at some of the problems that are sort of becoming a bottleneck for the growth of offshore wind. What are the one or two things that you think need to be fixed or upgraded to be able to make that happen?
So, I mean, I sorry, I wish it was only a couple of things. It's a lot of things to be done. I would actually like to broaden it, not just to focus on offshore wind, because that's only a part of the solution. I think the most important thing to do to really accelerate the green transformation, that is what we've talked about a couple of times throughout this conversation, and that is to set ambitious targets. Because if you set those targets, the markets will also help deliver. The markets are a very forceful engine of innovation and action, and it's about what direction do you want that engine to run in. Do you want it to deliver green, or do you want it to deliver fossil fuels? What do you want it to do? If it's green, then set the targets, and then, as I said, there's a lot of other more near sort of policy stuff that you also needs to get going. But those targets are really, really important to keep on pushing.
And same question for you, Dan.
Yeah, I think I really agree with both the comments before. I particularly like what Kate said. I think it's around turning the market upside down in many ways. But when we talk about green finance, one of the questions we get all too often is, well, what's the reward for doing this? And incidentally, we do see a consistent premium in the issuance of green bonds in some cases that we think might be because the fact that the bond is green, for example. We can't say that for sure, but we do think that could be a deciding factor. However, I think the key question that we need to see developed in the next 5 years is not what is the reward for doing this, but what is the financial penalty for not taking climate action seriously. And when we get to the stage where the financial markets are thinking more along those lines, then we know that we've made serious and decent progress on this space.